Hello everybody and welcome to the midweek market update from Smack the Markets for the 8th of July. So as the week has slowly progressed, we've had a bit of a stumbling really in the bull run on the US stock markets. The Nasdaq still continuing to be extremely strong, but the S&Ps and the Dow have now sort of started to weaken off a little bit. So we'll take a look at how those have progressed. Also, we've got increasing tensions now between China and a lot of regions around the globe, not just the US, and that's maybe starting to have a bit of an impact on trader sentiment as well. So let's have a look at the markets we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. Now, if we have a look at the Dow here, if we start off on the daily time frame, you can see really from Monday that the market has sort of managed to pick up a bit of speed. It managed to sort of get above the 26,000 level. In actual fact, it got into some intraday levels that we'll see on the 4-hour time frame. And since then, and particularly yesterday, the market has then sort of sold off sort of rather significantly. Having said that, from the higher time frame structure here, it's still looking reasonably strong, and this is why I wanted to show you on the daily time frame. You know, we've still got higher lows forming, these significant low turning points. We've still got those higher lows. And note really where the sort of low, the most significant recent low is on the daily time frame. That's right the way back down here to around 2470, 24,700. That's quite a long way for the market to retrace before we start to break these sort of sequence of higher lows. Having said that, we're not really getting many higher highs at the moment. We've got these highs over here, which see us into around 26,600. And the market's just not sort of really getting anywhere close to those at the moment. On top of that, we've got this sort of divergence that we've seen on the daily time frame, which is now just starting to sort of flatten out. So the big question is here, are we starting to see some evidence of some buying activity coming in now? Are we going to start to break through this and push higher? Or are we just going to sort of continue going sideways? It's a little bit difficult to get some sort of direction on this at the moment. So if we take a look at the 4-hour time frame, you can see the sort of sell-off here. You can see that we had this rally into the 26,000, then the push up to 26,160 or 170, and then even a spike up to the 26,300 level, which we marked in on Monday. And this level here, we can see that the market respected this a couple of times before on extension. It's done exactly the same again here. So with the price testing this level here 3 times, unable to really get any further advance from it and selling off each time it's hit that area. So we're getting some significant resistance around 23,300 that if we see this bull run continue, the market's going to have to get through at some point in time. Having said that, you look at the 4-hour time frame, we're now sort of breaking trend here, and we've got the market sort of making new lows here. So I think at the moment here on the 4-hour time frame, the most significant low that I'm concerned about is the 25,500 level through here. You can see that's been quite a significant sort of price point. If the market does break underneath here, then I think we'll start to see some significant move to the short side down towards those sort of lows at 25,000 and 24,700. In between this, this is very much intraday trading opportunities for us, trading the markets in between or when they develop any kind of lower time frame trends in between these sort of trading windows. If we take a look at gold now on Monday, we're looking at a rather sort of narrow range on gold, but we're looking for gold to move from a breakout here of 1790 up to that 1800 level. That was the sort of straightforward move that we were looking at, 1800 being a very significant level on this market. We got that eventually yesterday. It was just a huge amount of volatility that came into the market and momentum that sort of pushed the market through after retracing back to 1780. So the big question is here, where now for gold? And from a longer term perspective, if we come back here, from a longer term perspective, I like gold to the long side up towards around 1950. If we just come out of this, maybe we look at this on the daily time frame. In fact, we'll have to go up to the weekly time frame to see this. If if we just sort of pull right the way out of this, you'll see that there is another sort of significant sort of price point up here, decision point around 1950. So this, together with the sort of stimulus that's being pumped into the system, I wouldn't be at all surprised, this supporting gold and looking for gold higher prices. The challenge, of course, is trading gold and trading this from a technical perspective. So pullbacks into developed trends, into geometry is the sort of preferred method that we like to use, and possibly back into significant levels. So we'll certainly be keeping an eye out around the possibly above this 1800 now. If you take a look on the 4-hour time frame here, so around 1805, we've got this high up here clustering with these lows. Some sort of retracement back into these sort of zones could present sort of opportunities to acquire new positions. Now, if we take a look at Euro GDP, on Monday we were looking for long opportunities on Euro GDP as the market sort of found support around these significant levels that we're seeing on these higher time frames. What actually happened was we actually got positioned in this, but it didn't play out. I think Fergal was the only person that managed to capture a winning trade on this, and the market sort of turned around and came back. Now this is now starting to look more to a short trend here, or more of a short opportunity, as the market sort of pulls back into, it's made a new low and pulling back into potential resistance. Having said that, from a higher time frame structure, these markets are still looking in long trends or messy trends. So we're looking elsewhere for better, clearer charts, and some of those we can find on markets like Euro CAD, for example. Now, Euro CAD has really been a market that's been off the watch list for quite some time due to the sort of sideways choppy action that it's been stuck in for a while. You can see this here from the weekly chart. The market's been in this sort of consolidation here for quite some time, but it is starting to show evidence here of breaking out to the long side. If we come down to the daily time frame, you can see that we've got a channel here that the market's, or a range here that the market's been stuck in for a while. Price is starting to move up towards the top end of this now, which is around 155. So you can see up here around that sort of, 154.50. You can see that up here where the market's tested multiple times before. If we come and take a look at this on the 4-hour time frame, and again, if I just sort of zoom out of this to get some sort of perspective, you can see that there is another level that the market's just sort of pressing up against at the moment. Through this level here, puts us into a bit of a trading window up towards that 154.50. That's the level we saw there on the daily time frame. It's quite a bit of a distance there, and also on the 4-hour time frame we start to see the evidence here of a new trend forming. So we've got some structure here. We've got the moving averages coming into the right order. We've also got convergence there on our indicators as well. So we're certainly looking at long opportunities here on Euro CAD after the breakout here, looking for opportunities within this sort of trading window to the long side. So there's a few opportunities there that we're looking at and keeping an eye on in the trading room going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.